Hi guys, my name is Tony, and this is my first YouTube video. So for everybody watching, thank you. Make sure if you guys can, do me a favor, please, obviously give me a like, and then please drop me a follow as well. So, I'm very into ETF investing. I don't have a lot of ETFs in my portfolio. Most of the stocks in my portfolio are single stocks. And if you guys follow me on TikTok, you know that, my biggest positions are, my top five biggest positions are Amazon, Tesla, Apple, and I believe Coinbase, not in that order, and TSM as well. So, my biggest position right now is Tesla with 300 shares. So, but I'm in the middle of rebalancing my portfolio, and I'm heavily investing into S&P 500 ETFs. Now, there's a lot of different ones that you can choose, right? But the one that I'm investing in specifically is this one right here that you guys see on my screen, okay? It's the SPDR S&P 500 ETF Trust. And this is by far my favorite one. Now, why am I choosing this one rather than, let's just say, like a really popular retail favorite, which is VU, right? You guys see this right here? We have VU. This is very popular. SPLG. This one is really popular as well. All right. And then we have FXAIX. Again, very, very popular among retail investors. However, my favorite one is SPY, right? SPY. So, we'll kind of dive deeper into that. Now, SPY is currently trading today as of April 24th at $546. So I believe out of all the different options, it's the most expensive one, right? Share price doesn't really matter just because of the fact that you can buy fractional shares. So it's really about, dollar amount invested. So that's the number one thing that you look at. And if you look at the performance over, let's just say the past 5 years, SPY is up 93.2%. Let's take a look at VU. It is up 93.13%. SPLG, let's take a look at that one. That one of the 5 year is 93.38. So it's a teeny bit higher than the rest. And then FXAIX is, let's take a look at the 5 year. It is up 89%. Okay, so this one's a teeny bit lower, but all in all, the performance is the same. Okay, now out of all four, SPY has the highest expense ratio. Now, what is an expense ratio? It's essentially a fund management fee, right? And so those are really important because these institutions aren't managing your funds for free, right? They collect a little bit of money. So funds are for FXAIX, SPLG, and VU. They range anywhere between 0.02 to 0.03%. And if you look at FXAX, it is actually 0.015%. So this is really, really low. It costs nothing to manage, right? Now, if we take a look at SPY, let's go back to SPY here. Let's take a look. Actually, yes, that's it. The expense ratio, we'll get it listed somewhere here. I know it off the top of my head, it's 0.09. But just having trouble finding it right now. So I'll just type in expense ratio. It is 0.09%. There we go. So now you're thinking like, hey, look, if the performance is pretty much the same, why are you buying SPY rather than all these other ones? And there's one main reason, okay? And the main reason is I like selling. There's an options trading strategy called covered calls, right? And that is why I buy SPY. If we take a look at the mutual fund calculator, I have a mutual fund calculator, okay? So let's just say we buy VU, we put in $12,000 a year, the rate of return is 10%, and your fund expense ratio is 0.03, okay? We're gonna make all the factors the same minus the expense ratio. So hypothetically speaking, if we buy VU, with these parameters, our ending value is gonna be roughly around $2.1 million, all right? So very impressive. And over the course of 30 years, we are going to pay 3%. Okay, so we're going to pay $12,000, almost $13,000 in fund management fees. Okay, not a lot of money. That's very, very cheap. Now let's just say we buy SPY instead, and then our fund expense ratio goes to 0.09%. All right, let's calculate. Woo. All right. So you see how we jumped from 13,000 to 38.4, right? So, roughly around a $25,000 increase, which, that's a decent chunk of change. It's not like back-breaking type money, but yeah, it's a decent chunk of change, right? So you're going to pay an extra 25K more to hold SPY than VU, but why would you do that if, the returns are pretty much identical, right? There's not a huge difference. The reason is covered calls, okay? So I love trading options, right? And so what I like doing is I like selling covered calls against your shares. Now you need to have 100 shares in order to sell covered calls. So you need to own, you can sell one covered call for every 100 shares, right? So for example, if you have 150 shares of SPY, you can still only sell one covered call, right? Now, once you get to 200, now you can sell two. So SPY is the only S&P 500 ETF that has options that are worth selling, right? VU, SPLG, and FXAX is a mutual fund, I believe. So, but yes, VU and SPLG, they don't have options that are worth anything, right? They're worth pennies. SPY, because it's more for day trading, like it's very, very popular among retail investors, who like day trade. That's what SPY is mainly used to do, right? And so, so there's a lot of interest in, options trading. So their contracts are worth a lot more. So let's pull up a options chain. Here, let me hide this really quick. Sorry guys, I'm terrible at making YouTube videos. This is my first one. So I'm not sure if you can see this. Hold on. Cool. SPY options chain. Just look at that. Boom. So today is the 24th. Okay, so no, this isn't going to do it. There we go. Let's see if TradingView will have it. Cool. We need an options chain that is for April 24th. Let's just look at the April 24th calls, okay? So we finished at 547 at the end of the day. So we'll click show all, okay? So these are the calls and these are the puts. These are in the money calls. Okay, look. So tomorrow, I mean, these values will change, right? But hypothetically speaking, I could sell and again, these might change because, it's after hours. So these might not be accurate. But hypothetically speaking, tomorrow I would be able to sell, let's say, SPY opens up at like 550, right? Okay, let's say it gaps up. So these are going to be worth a little bit more. But hypothetically speaking, I like to sell 0 DTEs, and I like to do this every single day, right? Where you sell a SPY call option, you generate, $20, $30. You choose, I like to choose deltas that are a little bit lower. When selling these, I like to be a little bit more conservative because I do not want the stock price shooting up above my strike, because then it becomes in the money, right? So I like selling these low delta calls, right? And so generally speaking, I will sell these closer towards the I'll sell these closer towards, like, I don't know, middle of the day. Now there's going to be a little bit of theta decay that erodes the value of these contracts, and again, there's a lot of different factors that affects options pricing and how these option contracts are priced. But the logic here is, and we can save this for a separate video on, like, what are Greeks, what are options, how they're priced, etc. But I like selling these. I like being more conservative. I don't like selling these out of the money call options, right? Not too in the money. I like selling out of the money. And so the market's been a little bit volatile recently because of the tariff nonsense, but that's just how it goes. So your option contracts are a little bit more juiced because of because of how volatile the market has been. So I like selling these out of the money calls. So again, this is very advanced, right? If you don't like doing this, if you just want to be a buy and hold investor, just buy VU. Just buy VU. But because, I do dabble in options trading, and I do a lot of options, this is why I buy SPY. So, and then over time, let's kind of do the math, right? Let me pull up a calculator really quick. Okay. Let's pull up a calculator. There's roughly around 250 trading days. There's roughly 250 trading days in a year. Let's say we average $20, right? This is very conservative, but let's say we average $20. That's $5,000 a year. Okay. Now, remember this example that I use, we were investing for over 30 years, right? So let's say 5,000 times 30 over the course of 30 years, that's $150,000. $150,000. Now, there's tax implications. Are you doing this in your taxable brokerage? Are you doing this in your Roth IRA? But this is the exact reason why I like SPY, because although you're going to pay more in portfolio, fund management fees, this is way higher, right? And you just can't do that on VU. Now, are you going to have some days where where you lose money? Of course. That's always going to happen. But, if you can average, 20, some days you might make more, some days, you might lose, some days you might make, $10 instead. But if you can average $20 a day over the course of 30 years, you'll make 150 minus the 25. So just by holding SPY, you make $125,000 more, less taxes potentially. So hopefully that gives you a little bit, guys, of insight as to why I buy SPY. Again, there's no right or wrong answer here. Just depends on, what you guys, what your goals are. Like sometimes this is really complicated. Not everybody has time to learn about options, right? And so, some people have, other interests or business pursuits that they're pursuing. So cool, guys. Well, hopefully this gives you guys a little bit more insight as to why I buy SPY rather than VU, and some of these other, ETFs, index funds, mutual funds that are available. So again, if you guys have watched, this entire video, I really appreciate it. Very, very do. And again, please, if you guys can like this video, drop me a follow. It really helps support the channel. Again, this is my first YouTube video. I've never done anything like this before. So, again, I'm going to be pumping out a lot of content. I just got laid off from my job. And we'll go from there. Cool. Thanks, guys.